Let's have a look at what's happening in the real estate market. Let's have a look at what's happening across the country. So property values gain pace heading into spring, driven by record low listings. Australia housing market is heating up with the September delivering the strongest monthly rise in national dwellings since October 2023. So things are going along quite nicely. Supply squeeze fuels price growth as listings hit historical lows. First home buyers face fierce competition as deposit guarantee launches. Australian housing markets are gathering strength as we head further into spring, with September marking the strongest monthly gain in October of 0.8% in September. On a quarterly basis, the national HRV increased 2.2%. Growth has once again become broad-based with every capital city. That being said, some divergence in the pace of growth is once again emerging. We'll have a look at that. Perth and Brisbane are pulling ahead of the larger capitals, up 4% and 3.5% respectively. So 4% growth in Perth. So Tim Lawless, obviously we get our stats from Cotality, which is the provider of the stats. Tim Lawless notes that each of these cities continue to show a severe lack of advertised supply. The number of homes for sale at the end of September was about 53% lower than average in Perth and Darwin, with Perth being 31%, Darwin 45%. At the same time, estimates for quarterly home sales are tracking above average, demonstrating a clear disconnect between demand and supply. Look, we know this, but we need to look deeper. Most cities are seeing stronger growth rates in housing than in units. Home values have risen across each of the broad value tiers. However, the strongest pace of growth has rippled from a lower quartile of the market. So the lower end of the market naturally is getting most of the gains and growth. Advertised stock levels are below average across every capital city. The disconnect between supply and demand has seen selling conditions strengthen. Auction clearance rates have been holding around 70% since mid-August, up from an average of roughly 63% through to June quarter and 62% in 3 months to March. How's our rental market going? Well, this is interesting. The national vacancy rates slipped to a new record low of 1.4% in September, with only 1.1 of Australian units and 1.7 of houses estimated to be vacant and available for lease in September. Critically low. The renewed downtrend in rental vacancies has been accompanied by a re-acceleration in rental growth. The national rental index rose 0.5% in seasonally adjusted terms through September, taking the quarterly change to 1.4, the highest since June last year. Among the capitals, Darwin recorded the strongest quarterly increase in rents, up 2.9%. 1.9 rise in Perth. The bad news for renters is the rental listings are continued to trend lower, with Mr. Lawless, over a few weeks ending September 28th. The number of rental properties listed for rent nationally was tracking around 25% lower than the 5-year average. The recent re-acceleration in rents could have implications for inflation down the track. Although rental growth has rebounded, we are once again seeing home values rising at a faster pace than rents, which is natural, which has seen gross rental yields reduce a little in recent months. So rental yields average at about 3.65 across the country. Perth is leveling out at, we are at 5.9 regionally for rental return, and Perth City 4.2%, being one of the highest in the country, close to Darwin. So still a very strong investor sort of area, place to invest with those type of returns. Let's see what else is happening. So let's have a look at, so the spring selling season is shaping to be strong. Real wages growth at 1.3 per annum is at its highest level since June 2020. Job market remains tight. So still those same old chestnuts affecting the real estate market, with the expanded home deposit guarantee going live a few days ago. So some headwinds. Stretched affordability is arguably the most significant factor, keeping a lid on value growth. Based on data to June, the median national dwelling value to household income ratio was only marginally off record highs of 7.9, with Sydney recording a ratio as high as 9.6. So, folks, it's the same old, low stock levels, stock starvation and high demand driving prices, although affordability is keeping the pricing intact, because we're not seeing those horrific rises of 6 and 8 and 10% as we did previously. They are more moderate, especially after two very, very hot years of growth. But looking like there's no end in sight for the property market, which is very, very good for you guys. New Zealand, because we do have some New Zealand members, so this is more for them. Property, but it's also good for us to keep an eye on what's happening in Aotearoa, New Zealand. Property values in Aotearoa, New Zealand edged up for the first time, 0.1%, which is not a great deal, in September, breaking a run of 5 consecutive months of falls. The national median value now sits at 810,000, still very high. Calvin Davidson, the chief economist for New Zealand for Cotality, said that September's slight rise is consistent with a lower mortgage rate, as well as early tentative signs of an economic turnaround and an upward trend in property sales volumes. They've had a downturn for at least 2 years, which you all know, being avid Real Estate Brilliance members. That said, September's rise in values was clearly marginal, and it's far too early to conclude that this marks the start of a new sustained shift. Perth, back to Perth, 754 transactions last week. Naturally, it's school holidays, that will drop. There was 2,820 properties available for sale in Perth, which is tragically low. We know this. Perth rental market, 2,179 properties available, tragically low, with 573 properties leased last week. Once again, down because of the school holidays, which are still going this week and ending on Friday.